Hello traders and welcome to another video review. Today is Wednesday, March 29, 2023. Let's take a look at the Forex calendar for Wednesday. CPI data from Australia had been published overnight. The CPI is decreasing from 7.4% to 6.8%, which beats the expectations of 7.1%. We are still waiting for the GfK German Consumer Climate data and German Buba Balz speech. All of them. Both of them were, of course, at the events from the Germany. No policy, European Central Bank non-monetary policy meeting will be held today at 9 o'clock as well. And then during the New York session, we got pending home sales data scheduled for release at 4 p.m. and crude oil inventories today with the crude oil inventories scheduled for release at 4:30. At 6 p.m. we got another speech from the German Buba Mauderer, and at the end of the day we got the speech from Bank of England MPC member Kathleen Mann, and then ECB Schnabel will give a speech as well, 22:11. So kind of a interesting day. We got some important data scheduled for release during the New York session. We got plenty of comments today. And of course, the GfK German Consumer Climate data, kind of interesting to see what is the current consumer climate in the Germany, the biggest economy in the Euro zone. So in that situation, let's take a look at the majors, and we are going to start with Euro dollar. The euro dollar has made another local swing. Okay, so this swing was made at the level of 1.0849. So in the middle of nowhere. Basically, this is no retracement level, no nothing. So right now, what we are going to do is to place some line here. As you can see, this line is very interesting because it shows you guys that we are still trading above this line, okay, with positive momentum. Momentum is right now 58 points, so it's quite strong positive momentum. As you can see, the market has been moving up and up since the lows on the 24th of the March. So that's the whole week of the movement to the upside. Nevertheless, we are still trading below the highs located at 1.0930. 50 and 100 periods moving average, okay, is located still below the current price. But in a case of the reversal here and breakout below this this short-term trend line support, those are the technical support levels: 1.0807 and 1.0746, and of course the low from the 24th of the March, 1.0702. So the market can bounce and continue the up move, or it can break below this levels. For now, it looks like the outlook remains bullish. However, any kind of movement to the downside will not be basically greet by the bulls, because the situation here might be like that on the euro dollar. We got the wave A down, we might have the wave B down, we need the wave C. So this is why the breakout below the technical supports will not be welcomed by the bulls, because they might sense the free wave correction to complete on the euro dollar. So that's the situation on the euro dollar. Please pay attention, especially to the short-term trend line. Let's take a look at the US dollar to the Swiss franc. The situation here is on a 4-hour chart. Of course, it's still the same time frame as the euro dollar. We got the bullish engulfing pattern here, so let's just mark the level. The level was 9,136, just above the technical support at 9,120, and way above the main technical support located at 9,071 pips. Right now they are testing the 50 periods moving average. It looks like the market wants to go towards the 100 periods moving average, located at 9,242, and this level, which is very interesting, is very highly correlated with the technical resistance. Okay, I mean correlated. It's in very, very close to this technical resistance. It makes this. There you go. Some other color red. There you go. So that's the technical resistance, and the market is still trying to move higher, because the recent very nice impulsive behavior of the US dollar to the Swiss franc unfortunately didn't result in any sort of the new swing high. So right now, the most important level is this one, 9,337. Only if the market will break above this level, the extension to the upside might happen. So the current situation might look like this: A, maybe B, maybe C. Okay, but we need to break above 9,242, 9,337. So that's the outlook for the US dollar to the Swiss franc. Crude oil inventories today. So let's take a look at the crude oil, and we can see clear rebound from the lows of 64.12, and the next target for the bulls is located at this swing high here at 80.93. So right now the market is locked inside of this between those two levels, and of course we are still testing the intraday technical resistance at 73.78. All right, so that's the situation here on the crude oil. Of course, from the lows we got the wave A, we got the wave B, we have the wave C. That's a very nice rebound, because this looks very much impulsive. This looks like a rebound. It doesn't meet any Fibonacci levels. Is there any kind of Fibonacci relationship here between wave A, wave B, and wave C? So let's take a look here, and this one goes here. And if you take a look on this situation, let me just extend it a little bit to the left. There you go, somewhere around this level. You can see that the wave C target for one-to-one relationship, so the length of the wave A is equal to the length of the wave C from the bottom of the wave B at the level of 74.45 roughly. Then there is possible extension of the wave C towards the level of no, that's not what I wanted to do. Go back somewhere there. Extension towards the level of 161. It's not that's 161 extension level located at 79.13. So that's another possible target for the wave C. So let's now, okay, so it's completely okay, so let's leave it like that. don't mess around. Nevertheless, the point is that it will be still below the technical resistance, and it still will be considered as a corrective in nature. So of course the market might reverse even after going towards the 161. Nevertheless, if we hit towards the to the level of 74.36, the market condition will be extremely overbought, and the market will be ready to go lower. And because it's a free wave movement, a clear free wave movement with some sort of the potential market geometry levels included as well in this movement, the outlook rather remains bearish for the crude oil, and the data from the crude oil inventories might trigger some important movement here on the crude oil market, short term, of course, in the short term. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.